Congratulations, if you're watching this, you survived the crypto crash of 2021. Yeah, congratulations. You got the diamond hands if you held on. Now, I'm going to show you a better way to trade and not have to ride the big roller coasters because I'm going to help you understand the structure of Bitcoin and why we see these excessive moves higher and lower and an interesting way to trade it. So if you want those diamond hands, let's talk about that and let's take a look here at the Bitcoin futures. Now, this is a big boy contract. This is an institutional contract. I'm going to show you a opposite contract that's a tenth of this size that makes trading Bitcoin a little bit more interesting. Now, I did say trading, right? That's the pet peeve. First of all, Bitcoin is not a currency because you can't use it. I know those Bitcoin people, they're offended now. You're going to leave a comment and tell me I don't know what I'm talking about. But I do, but it doesn't mean that there is a tangible use for Bitcoin. It is a means of exchange, just like dollars are. But we're going to talk about the marketplace and why we see these kind of moves, or not these kind of moves, why we see these kinds of moves and understand exactly how to navigate that and understand when to trade and why to trade this specifically and not be the yodelers or the diamond hands. So let's take a look here. What we see on the side here is a volume graph. Now, this is a fairly new contract, the Bitcoin contract. It is fairly new. I mean, it's been out for I think about 2 years now, 2 years-ish. So there's not a lot of data. And what the volume profile shows is where volume has traded the most excessive volume. So if we just look at the Bitcoin futures here, now Bitcoin futures are going to trade differently, or the price difference is going to be different what you see on a Bitcoin because there's carry costs. So how the pricing is different, and that's the pricing is embedded with what carry costs are. So on Apple here, if we just look at a volume profile, you can see a lot of volume that's traded here on the profile where we would see if it did sell off or it was going into that would be support and resistance, a lot of price discovery there and so forth. So the problem is that it's thinly traded. Even though there's a limited amount, it's kind of a wild, wild west. There's nothing wrong with that. There is nothing wrong with that. That is where edge is. It's like going to the casino table when people are drunk and you are sober and they're playing sloppy. There is an edge. You just have to understand how to trade it. That is the opportunity with these assets or with these instruments, these vehicles. It's no different than penny stocks. People poo-poo on penny stocks or different things, and they want to get into the big boy game. Well, big boys are going to beat you up. Big boys are going to smack you around because that's their game, and this is what they practice. This is why they have deep pockets. When you come into these other opportunities like this is where the little guy can have advantage. So Bitcoin right now is, well, like I said, we did see that crash here. So going a little bit into that crash, why did Bitcoin crash? Well, the problem is not because people are hodling and they're refusing to sell, is that there's not a lot of price discovery. You know, when something goes straight high or straight up, as we've seen here, there's not much price discovery. There's a lot more price discovery down here than there is up here. These are very, very lofty areas. So there's going to be a lot of volatility. That's good if you trade because you can get in and out and you see this big volatility. But you have to understand that. So when you're short, that's the key. You can't short Bitcoin. The only way you can do it is through the futures here. This is a big boy future. But that's the issue with Bitcoin. There's not a lot of derivatives out there, and you can only buy Bitcoin. That's crazy. This is the reason why we saw the sell-off here. Because if you had other people on the other side of the trade that can unwind, you can find price discovery and you won't get these big moves like we just saw and drop 50% in just a few days. That's meaningful because if you have the other side of the trade, you have other people that can manage that risk as well. If you're only on one side and you can only do one thing, that creates a lot of risk and creates a lot of volatility, which is the reason why. So a lot of people won't tell you, and you probably never heard this, but you can only buy Bitcoin. You can't short it. If it was a true marketplace, you should be able to buy and also sell short if you like to. So those that like to complain about manipulation, it's the purest form of manipulation. You can only buy. That's crazy. What happens if I want to come in there and short it? I'm wrong. Okay, well, take the other side of the trade, but you can't. It's like going to Las Vegas. You can only bet what they give you. It's the same thing. You can only buy Bitcoin. You can't take the other side of it. With the futures here, it's a little bit different, and you can, but there's not a lot of volume here. But the thing that just came out recently are the Bitcoin futures that are minis, MBT. So we have, these just came out here, and these are fairly interesting. These are a tenth of the size there, so that means with the leverage, and again, futures are, you're going to have to look to your own risk profile. But listen, if you're trying to diamond hand it, you're taking a lot of risk here. But it's a different risk than owning and buying into some Bitcoin. If you buy one Bitcoin, what, 40,000. But I understand that you can buy smaller pieces of it. But if you want to get leverage, which is going to be the key to accelerate opportunity for you, accelerate gains, to make money, actually. I mean, if you don't have any leverage, you're at a turtle's pace. But to get involved, it's a good start. But to take this serious, as I do, or other traders, these are interesting. This is what I'm a lot focused on. When you get these big sell-offs like we just saw, this creates an opportunity to again, buy. You get a big shakeout, which is going to happen. And this is where you would want to buy. Going to the premise of the video, when you buy, not when it continues to go higher, when you get this big shakeout. Someone else's pain is your opportunity. Always remember that in the marketplace. Someone's pain, someone in the gutter is your opportunity. That's just how it works. You can't control the fact that if that other person took crazy amounts of risk, you're just worried about yourself and you focus on your opportunities and you pick your spots. So if you're looking to get into Bitcoin, this would be a perfect spot. Now, can you buy the Bitcoin? Sure, you can buy it. But looking at the futures here, if you want to trade this, it had yesterday when they had the big shakeout, it was that big shakeout creates a lot of opportunity to buy into that bounce and then to sell into it. So those are very volatile moments. But when things get volatile, this is a very good alternative where for $2,000, you can control this future that gives you leverage, and it gives you a lot of opportunity to use the leverage to trade Bitcoin, and again, not to trade it, not to hodl it, because these contracts do roll over, and you want to make sure you understand that. So if you go to the CME website, you'll find more information about that. But again, there are things about this that you should know. Even though it is 24/7, there are times where they're not trading, and you should understand what every point means, every point movement on the micro Bitcoin here. But this is something that is relatively new. It's a new vehicle out there. It's starting to get a lot more traction. This is getting a lot more attention than the big boy contract. The volume has already exceeded that in this short amount of time. So there's a lot more focus here, and you can play both sides of it. So that's where things get a little bit more interesting. And as we see more interest and more derivatives start to pile into this, and also other cryptos, then that's what's going to make the marketplace more efficient and less volatile overall. But again, these are trading instruments to me. That's my opinion. If you think this is going to be the future, listen. I mean, a lot of people thought BlackBerry was going to be the future as well, and they were right for a certain amount of time. But where's BlackBerry now? Ain't no one using it. So hate me all you want. That's fine. I'm here about making money. So this is what my way of trading Bitcoin. You want to trade where a lot of volume is at as well. So that's why I focus a little bit more on Bitcoin, Ethereum as well. But that does have a future. Again, that's a big boy contract. So the CME does good stuff. They mostly target to institutional traders, but they now are trying to say, well, we do want some retail people, because they realize that the institutions are not trading this. It's the retail. So now they're trying to get into that. So it's good. It's interesting. Keep an eye on this one. But again, now we have some resistance overhead here. So on any kind of rip, I think it's a sell. You tell me that any different, but that's where I think Bitcoin and how to trade it is the most successful. Got to look for opportunity. Got to look for where liquidity is at, and there's no reason to hold it. Just trade it. Trade it. Put some money in the bank. Active income. Turn into passive. Talk to you in the next video. Until then.